In 2020, Nigerian economy shrank by 1.8%, its deepest decline since 1983. The COVID-19 crisis drove the economic slowdown as external context was marked by capital outflows, intensified risk aversions, low oil prices, and shrinking foreign remittances. According to latest report from the World Bank titled "Resilient Through Reforms," Nigeria exited its deepest recession in the fourth decade as COVID-19 restrictions were eased, with poverty increasing in 2020 due to the combined effects of COVID-19 and rising prices. The report acknowledges notable government policy reforms aimed at mitigating the impact of COVID-19 crisis and supporting the recovery, which includes steps taken towards reducing gasoline subsidies and adjusting electricity tariff towards more cost-reflective levels, both aimed at expanding the fiscal space for pro-poor spending. As Nigerian economy gradually begins to experience recovery from the negative effects of COVID-19, the global financial institution notes that despite the more favorable external environment, with recovering oil prices and growth in advanced economies, a failure to sustain and deepen reforms will threaten both macroeconomic sustainability, policy credibility, thereby limiting government's ability to address gaps in human and fiscal capital, which is needed to attract private investments. To talk more on this, I have joining me live via Zoom from Abuja is the World Bank Country Director for Nigeria, Mr. Shobham Chowdhury. Thank you very much, Mr. Shobham.
Good afternoon. Thank you for having me.
Yes, it's really great to have you. Let's start with the details of the document, Nigeria Development Updates Resilience Through Reforms. It states that reforms implemented by the Nigerian government were critical and timely to alleviate the impact of the recession on the economy and, of course, to create additional fiscal space. What exactly is meant by reform slippages, and how would it threaten the pace of recovery and limit government's ability to address gaps in human and fiscal capital?
Thank you. So I think your lead up to this kind of points out what those reforms are that are critical to maintain the momentum. I would say first on the PMS subsidies. I think over the course of 2020, to let the PMS price domestically, the retail price, reflect the true value cost of importing PM. What has happened since December, when I think the PMS price was frozen, is that the gap between the import cost and the price at which it is being sold domestically has gone up. That's a tremendous drain on the Federation budget. I think it's up to about 5 billion naira a day right now. Yeah, and it's simply a matter of, which is 150 billion naira. And that's where that's given where oil prices are right now. So it's really a matter of, a simple choice. In economics, we talk about opportunity. How best can you use scarce resources? And so part of the reform we feel that should be sustained is to dedicate these 150 billion naira instead of having them go towards PMS subsidies, which frankly primarily benefit the wealthy. And yes, they do benefit the poor as well, but not nearly as much. So take that 150 billion, put it towards things that the poor directly would benefit from, and not just poor, ordinary Nigerians, investing in infrastructure, primary healthcare, basic education, digital. And then that's what's going to be needed for the longer term growth and for Nigeria to realize its potential. So most of the reforms are on the fiscal side, where we think there are opportunities for redirecting expenditures or for saving resources and putting them towards uses that would really help Nigeria realize its potential.
Analyze policy options to reduce inflation, protect the poor and the vulnerable, and of course support economic recovery. The current inflation figures shows a reversal in the heaviness of economic pressure, but that doesn't necessarily translate to market sentiments that only see exchanges in naira and the dollar. How do we begin to tally these reports?
So I think, yes, it is kind of the pace at which inflation itself was accelerating. I think that slowed. I mean, when, inflation itself is a measure of, the change in prices from month to month. And what we had been seeing was that not only were prices increased month to month was increasing. So that's moderated now. Now you see that the month-to-month increase has come down a bit. But I think what the market sentiment that you mentioned about, the continuing inflationary pressures, the fact is that prices are continuing to rise. And the fact is some of that is due to the pressures on the Naira, especially as reflected in the parallel market. I think one of the things that, in our judgment, now, obviously that we have suggested is that, what we see happening here, we've seen in other countries, that it's like when the pressure builds up inside a pressure, that we have valves on pressure cookers so that you can let the pressure off a little bit at a time. What has happened, I would say, over the last several months, dating back to probably last summer, as the NAFEX rate, which is at the investor and exporters window, has remained relatively flat, only marginally adjusting. The pressure has built up, and that has raised the parallel market rate. And the one thing you can see for yourself, if you look at Nigeria's past experience, the cost of doing business for local firms and the cost of many commodities actually tracks the parallel market rate rather than the official exchange rate, especially when the pressure is building. So part of our sense of how the inflation pressures could be reduced is to release the pressure valve a little bit, have the NAFEX adjust a bit more to reflect the market, demand and supply. And our sense is, again, going back to Nigeria's own experience, that doing so would actually relieve the pressure and the parallel market rate would come down. So that's one of the main things that we've been suggesting and we presented in our report. I think other measures to reduce inflation would include reducing border controls. I think, we fully embrace the goal of economic diversification and increasing domestic value added in Nigeria. But right now, having border controls that prevent essential imports from coming in, which Nigeria is not yet able to completely meet the domestic demand for, well, that's going to have a very straightforward effect. The domestic demand is not going to be met, and that will lead to an increase in prices. So I think relaxing border controls would also help.
Now, both domestic and foreign debt make up conversations on the front burner, truly. And subsidy consumption, you've also touched on that, has got more reaction from agencies and from the World Bank and even the IMF. Now, how do we start adopting cost-cutting measures and still be able to deliver services and, of course, infrastructure needed to support recovery, as projected by analysts?
So I think it's exactly what I said earlier.
Okay.
That in effect, the best place for the government to kind of mobilize the fiscal resources that it needs to invest in services, to invest in infrastructure, is to look at where it is currently spending money, which is actually not benefiting the poor nor creating the base for future growth. Number one, PMS subsidies. Okay, PMS subsidies are mostly benefiting the rich who do not need that subsidy, or you might even say, the large government convoys, which use up a lot of PMS. Just think for yourself, and I would ask every Nigerian to ask, how much PMS do I actually use on a day-to-day basis? Because how much does a wealthy Nigerian use? And then based on how much you use, that's how much of benefit you're getting from this 150 billion naira a month. So one simple, in concept anyway, politically how, whether it's implementable it's a much more complicated matter, is, take the 150 billion naira a month, instead of PMS subsidies, redirect them towards basic services and infrastructure. There are other examples of this. We talked about adjusting electricity tariffs to cost-reflective levels. That's also a place where the government is currently having to spend a lot of fiscal resources, which are scarce. So it really, what we keep saying is it really a choice about, which are the uses of the scarce fiscal resources that would most benefit Nigeria, it's the majority of the population, and help it realize its potential going forward. There are other opportunities in terms of just making sure within the recurrent budget that you could do some cost savings, but really the big items are things like PMS subsidies, electricity tariffs. I should also say, in terms of oil and gas revenues in general, how much of that is flowing into the Federation account. I think that's a potential area for further fiscal resources.
Let me follow up with the issues around exchange and what's been happening in that market until we have that demand and supply allow it to take charge, that we might not get to where we should be. Do you think, how can we have a sane climate that would attract investment with all of these challenges? Can we really attract that kind of investment that we want at this time?
So, one of the things that I've seen in all the other countries that I've worked in, and then, before I came to Nigeria in October of 2019, I was working primarily on East Asia and South Asia. And in fact, I've worked in every single country in East Asia and South Asia. And the basic kind of what we see everywhere is that you need to restore the confidence of private firms, whether they're domestic or foreign, that they should invest in a country, and especially invest in fixed assets, in training, their workers, things that, will take time to recoup their investment. So I'm not talking about, trade or things where, you're not really having to make a call on where the country is headed. The most important thing for generating that confidence is clarity and predictability about government policy. So at the moment, I think clarity and predictability in terms of exchange rate management. So we're not talking about, letting the Naira, depreciate and hit the ceiling. We're talking about just clarity and predictability. So business knows that, look, if I need foreign exchange to import, critical intermediate input that I need to sustain my domestic production, I will have access to that foreign exchange. If businesses don't have that clarity, then they will say, hey, I better not invest here because I might get stuck with these stranded assets. So I think that kind of, more than anything else, it's clarity and predictability. Obviously, businesses will want, lower taxes, et cetera, but a government has to mobilize domestic revenue, so it can't just eliminate taxes. But if you can assure businesses that, look, here's what the taxes are going to be, and here's why, and there's not going to be any uncertainty, flip-flops around it, I think that goes a long way towards restoring.
Let's look at the Afcfta, Nigeria's ability to put up good footing. It's questionable. Full and effective reopening of land borders for trade and strengthening regional cooperation to combat smuggling is also on the front burner. What new conversations do you think are expected from Nigeria's Committee on the Afcfta?
I think, look, Nigeria is the elephant in the room. Nigeria is the largest economy, not just in West Africa, and that our continent. Okay, so the broader success of the Afcfta depends on how Nigeria participates, and then how fully Nigeria really moves towards economic integration with the rest of the continent. I think here, this is something that won't happen overnight, and it needs to be thought through, because Nigeria has the ability to compete and be competitive, and it has its own huge domestic market, which I'm sure firms and businesses in other countries would love to access. But Nigeria needs to make sure that it's that things are transparent, predictable, and that domestic firms are playing on a level playing field in terms of being able to compete with firms in other countries. So I think here the main conversation, I would say, is to primary conversation within Nigeria about what's the what are really the ultimate constraints, binding constraints on Nigerian firms. Why hasn't the huge entrepreneurial energy of Nigeria, been unleashed and been fully realized so far? And getting that diagnosis correct, okay, is essential. And then comes the political will and the sustained focus to address that. I mean, one thing we all know, power. If Nigerian firms cannot have access to reliable power, then their cost of doing business will go up, and that will make them less competitive. I think connectivity links, access to exchange rate, foreign exchange when it's needed for essential inputs, just freedom from, being kind of held up by, whether it's by state or local government officials or federal. So having that clarity, I think, would be important. And all of that will help make Nigerian firms competitive. Just closing the borders and then artificially kind of putting in restrictions on trade is not going to help. And so I think the conversation is, about how Nigeria can fully realize the benefits of Afcfta has to be a conversation primarily domestically about, what does Nigeria need to do to really fully realize its potential.
All right, let's wrap up on this note. Now, what do you think is the future for Nigeria, going by all of these economic indices we have on ground in terms of living conditions of average Nigerian, business community, and incentives for more foreign direct investments? Let's wrap up on that note.
Okay. Look, let me begin by saying we think, and then I think most Nigerians recognize the tremendous potential that Nigeria has. Let me put it to you this way. Despite all the challenges and all the things that we hear about and that we see in the press and on the streets, Nigeria, almost without trying, is the largest economy in Africa. So just think about, given the resources Nigeria has, both natural resources, as I would say even more important, the human resources, the entrepreneurial energy that is very abundant. Think of the potential that Nigeria has to not just be the largest economy in Africa, but one of the largest economies in the world, and to be an economy that creates economic opportunities for all Nigerians. There are 3 million young Nigerians coming of working age every year. That's a tremendous demographic dividend that Nigeria could tap into, but it's not guaranteed. And so this is the other part of it, that Nigeria, I would say, for the last 4 decades, has not lived up to its potential. And one very simple measure of that, on an inflation-adjusted basis, real, or what we call, real per capita incomes, the average income of Nigerians in 2021 will be the same as it was in 1980, 4 decades ago. So there is a huge agenda ahead in terms of Nigeria realizing its potential. And then what we've been saying, and then, it's really Nigeria's choice, but Nigeria is at a critical juncture right now. Here's an opportunity coming out of the COVID crisis to decisively break away from, business as usual that has characterized the last 4 decades.
I must thank you so very much, Mr. Shubham Chowdhury. He's the World Bank Country Director in Nigeria. Thank you very much for spending your afternoon with us. We really appreciate this. We don't take this for granted. Enjoy the rest of your day. Thank you.
Thank you. My pleasure.
All right, there.